The Hollywood strike's taking a toll on Warner Brothers' upcoming movie slate. The studio delaying the release of Dune Part 2 from this November to March of next year. It's bad news for the studios, but our next guest is getting a bit more bullish on the theater business. She just upgraded AMC stock and predicts the domestic box office will see a bounce of 22% this year. Joining us now is Alicia Reese of Wedbush Equity Research Analyst. Alicia, thanks so much for joining us. So first, what's your thesis for this for AMC, especially when you consider this has been a meme stock trade?
Yeah, so, we rode the underperform rating from $40 2 years ago all the way down to $2 just yesterday, but we got out of the way, maybe a little too early, perhaps. But our view is that there's, potentially a bit of a cushion here. And one of the reasons for that is improving fundamentals. And I don't think that's very arguable. The other side that is a little bit arguable is that there's remaining retail traders in the space that could continue to provide a premium valuation on the stock. It's certainly getting pushed pretty hard the last 2 days. So we'll see how far that goes. But a big portion of our premise is that AMC can repay a decent portion of its debt while the stock's trading at premium levels. If it waits too long or if the stock collapses before that, there's still quite a bit of downside. For instance, without the debt payment, and if AMC returns to a fundamental valuation, no longer getting that premium multiple, it could trade as low as, in the $2 to $10 price range. If it does pay off its debt, however, and they can do so or pay down the debt at a significant level where the price is above $9, they could go to, say it's at a $12 price point, for instance, where it's trading today. They can issue over 400 shares and then get to a fundamental trading range of $8 to $10 and then, return to paying a dividend and repurchasing shares from there. And with positive industry fundamentals, that positive backdrop, that would be really positive for them, I think, overall.
So there's the immediate concern about debt, as you highlighted, which investors are focused on. But at the end of the day, this is a business that's built around theaters. You need bodies in those seats. Things have moved in a positive direction this year, at least this summer, because of the likes of Barbie as well as Oppenheimer. But when you think about the sustainability of where AMC is right now and the content that needs to move in, how big of a concern are the strikes right now?
Sure. I think the strikes are a concern in terms of quarterly box office. Some of the titles, as you noted, are going to be delayed. Some have already been delayed, like Dune out of Q4 into Q1. A Deadpool was removed from the release slate lineup for Q2 24. It doesn't have a new release date yet because they were in production during the strikes, and so they'll just have to wait and see when they can get back to production. But it's just a delay, the way I see it. I don't see it as incredibly harmful to the movie theaters. It's just a delay. So I still think that without Dune in Q4, the quarter can still end up higher year over year, and the year should still end up well over 20%. You have likely a 50% improvement year over year in Q3 ahead of that, and that will be likely the first quarter since the pandemic that you have a positive comparison to a pre-pandemic, 2019 box office quarter. So as the volume of this content continues to rise and improve and get closer to what it was pre-pandemic, these trends are really positive.